All right, what's up, everybody? Welcome to the Tuesday 10X interview. Every Tuesday, 9 o'clock Pacific, I am interviewing someone amazing. I try to make it 70% of the time. It's someone that is operating in the mortgage industry at a super high level, $100 million type producers. What's working now? Today, I've got Todd Bookspan as my special guest. Although I'm used to not having Todd as my special guest and just being a co-facilitator of the Friday Mastermind. What's up, Todd?
I'm fired up. I'm fired up. I've been so passionate about this whole idea of everyone in our industry up in their financial game. So I love your headline, Financial Freedom Loans. And so I'm super stoked to be here as a guest, right? I like being your co-host, right? Robin to your Batman, but today I get to be in the hot seat. I love it.
All right. Well, I'm pumped. And for everybody, guys, it's financial freedom lending. It is something that we've done hashtags on it before. We've talked about it, but throughout this call, we're going to really define what does it mean to be a financial freedom lender, and what are the different skills? What is the knowledge? And what are the habits? What does a financial freedom lender have from a habit perspective? Now, before we get into that, the first quarter, so, called the first 15 minutes, we want to formally launch the Win 30 Challenge. Today is April 1st, which if there was the beginning of a race for spring home buying season and someone shot a gun like, hey, the race is on, it would be on April 1st. I mean, the best of the best have been preparing for spring home buying season since December and November. And there's been things that they've been done, but it's not too late. But the race is on. It is spring home buying season, guys. And so that was part of the inspiration for the Win 30 challenge. 30 stands for 30 days. Win, pretty self-explanatory. You're going to win 30 days. The way you're going to win in 30 days, number one, you're going to do three things. And the first thing you're going to do is you're going to have 10 conversations, quality conversations. And we'll talk about what is a quality conversation a little bit as we kick this off. Number two, you're going to do two mortgage coach total cost analysis every single day. Like if you create two a day, that's 14 a week. By the end of the 30-day challenge, you are going to have skills. You're going to have results. You will be a modern mortgage advisor, a modern mortgage coach, and you will just plain have more confidence in the market and you'll have better results. I can't go public with it yet, but I just saw numbers from a great client of ours where the 10 top mortgage coach users at this company did 70% more loans than other loan officers in this company. So the mortgage coach TCAs will deliver better results. And number three, you got to have great energy. That means you need to walk every day for 30 minutes or more, target 2 miles, 30 minutes every single day. I'll be doing it with a ruck vest. So will Jeremy Forcier. Todd, did I get the three things right? Anything you want to add to that as Mr. Win by Noon?
You nailed it. And I'm always in the mode of adding another habit. So, for me, I just added a fourth every 30 days. I'm going to shoot to add a new habit that I need consistency with, right? So for me, I'm doing 2 sets of 30 push-ups and then a 2-minute plank every day for 30 days. I do that, but I do it inconsistently. And, I went to the gym this morning, F45, did a 45-minute class, and I normally don't do push-ups on those days. And I'm like, all right, I'm going all in to make it consistent because I think consistency is one of those things where, I'm talking to loan officers out there and I say, hey, are you doing TCAs? They say, yeah, I'm doing them. And I said, how many are you doing? Or are you doing them consistently? And then that's kind of when their eyes drop. They don't want to make eye contact anymore because, they're doing them inconsistently. And so I love this conversation. For me, they're all things that we've tracked in the Win by Noon planner. So it's all stuff that I've done on a quarterly basis, but I love as a community that we're going to focus on getting better together here in 2025.
Yeah, and couple things. This is not just an April challenge. The hope is this Win 30. It is like doing anything consistently every day for 30 days it's hard. Like it is hard to be consistent doing the same thing every day. It is not easy to have 10 quality conversations every single day. Like there are many top producers that's just a habit. Like that's not win in 30. Like I guarantee you, Shant Benosian, I don't know the exact number, but my guess is it's over 50 actual quality conversations he's having on a daily basis. But 10 is a winning number. Like when I talked to Jeremy Forcier yesterday, Todd and I had a little huddle up with him. He had already done 5 mortgage coach TCAs in the day, so he doesn't do 2 a day. He does probably 5 on average per day. But guys, the consistency, first of all, you'll come through this challenge, you'll be proud of yourself, you'll have better skills, and you will have the seeds to new habits. They're just going to help you win the year. So we do want to make this very social. I did a post in LinkedIn, not LinkedIn. I did a post in LinkedIn this morning, which I do want to talk about in a minute. But I did a post on Instagram, and I did hashtag win 30, and then daily 1 of 30, and it was a picture of my watch. I'm not necessarily going to do the Jocko picture of my watch every day, but I am going to participate in this thing with you, and I would love loan officers to share it. Let's create buzz. If you're a manager on this call, get your team involved. If you're a regional leader, get your region involved. If you're a CEO or a head of production, get your whole company involved, and let's, as a community, let's win the next 30 days, and y'all know what winning is. Todd, anything else you want to cover on? You think we've kicked this thing off? Anything else we want to mention before we go into new
Let's dig in
topics?
on let's dig in on a couple things, right? I mean, I love back, it's been probably 3-4 years. You and I interviewed Andrew Paul, who's a mortgage pro, and he's a Navy SEAL, and we talked about standards, right? So all we're doing is we're creating a new standard for you, right? And so it's just this whole idea of setting a number. For me, I circled yesterday in my planner 10 quality conversations. And so kind of to define that, it's not where you call someone, they're like, oh man, I'm sorry, I'm busy, can I call you back, right? That's a contact, like in the realtor world where they're all about contacts. We're about actually exchanging something of value with someone. So it could be your Tuesday update call today to a client where you're letting them know the status of their loan or if their appraisal came in. Could be a realtor update, but it's something where you're exchanging something of value with somebody. And for me, I record those differently. I record real estate agents and partner prospects separately than I do leads and client calls, because ultimately you're trying to look to see how you're going to grow that. And one of the things that, although I don't originate on a daily basis, I still help my team with business development. And so when I'm in town working, I've got a standard of 10 quality conversations with real estate agents every day. And it's just one of those things that really helps you grow when you really can narrow it down. But I would definitely encourage you to start with 10 quality conversations. There's a realtor, his name is Dustin Running. He's in Northern Arizona, and he's coached by John Cheplack, who's a friend of this community. And I saw him make a post about last year in a down market, he was up 40%, and he was focused on 20 quality conversations a day. So Dave already said it, Ballers actually, up that number a little bit higher. And then he's up 50% this year. And so I think it's just really interesting to see that, we know success leaves clues, and it's just, unfortunately, it's a numbers game. You've got to talk to more people to build the top of the funnel, to figure out how many people do you have to talk to in order to get a lead, how many leads do you have to talk to in order to get an application, how many applications do you need to get a pre-qualified borrower, and then how many pre-qualified borrowers do you need to get one closed transaction. And so like I can tell you for my team that it's 5 leads to 3 applications to 2 pre-approved to 1 closed. And so that's a consistent number. Now, what we're working on in 2025 is great. How many people do we have to talk to in order to get there? So I've got a team member, his goal is to do two transactions a week, right? 8 basically a month. And so therefore he's got to get 10 leads. And so he's really focused on that, but that's a lagging indicator. And so what I love about this quality conversations is it's a leading indicator. We can figure out how many people do you have to talk to, because that's your dial, right? Your loans are down. You got to turn up the dial. You got to talk to more people. But unless you figure out that number and understand your conversion rates, you're not going to get there. And so I think that's really the key on the business side, Dave. And I think on the personal side, I just love the 30 minutes of walking. I mean, you and I have been walking for a long time. You do walk and talks with people. I do walks and record videos and, gamify it, right? For me, it's a great time. I connect with my wife. We walk typically 4 or 5 days a week. The other days, it because I'm recording a video, walking my dogs. And then if I'm not, when I'm out there by myself, I'm using it typically to learn. I'm connecting with other loan officers on my team. I'm connecting with some real estate agents, or I'm listening to a podcast. So there's always that opportunity. And then, I'm a nerd. It was really funny, Dave. I'm on a weekly Monday call with anywhere from 15 to 25 agents in a community from Real Broker. And I literally, for the last 3 years in the summers, I get on my phone, I'm holding it out in front of me, and I'm walking while I'm talking to them for an hour. And they always kind of joke about it, right? If I'm leading the call, then I'm at my desk like I am right now. But I laughed on Monday, a week ago Monday. There was, again, almost 20 of us on the call. I was home because I already walked 4 miles with my wife, but there was two other people out there walking during the call. And so you have opportunities to put on your shoes and get outdoors. Just try to figure out how to do it.
All right, guys. So now I want to frame financial freedom lending and just put a few more logs on the fire that changes here. Like, guys, changes here. So I think everybody now knows the Rocket news from yesterday. You know, they now have acquired Redfin, which will give them 50 million eyeballs, purchase eyeballs monthly, 50 million. When you look at Mr. Cooper, and I'm not sure if it's 5 or 7 million mortgages. I think it's 7 million. Rocket is 2.5 million. So 1 in 6 mortgages under management are going to be getting a controlled experience. And by the way, it's a playbook that has over an 80% retention rate, you know. So we're talking about a really good playbook. And guys, here is a quote. I posted this on both Facebook and LinkedIn this morning. This was to me the quote I pulled from the press release. This is from the Rocket CEO. With the right data and AI infrastructure, we will deliver the right products at the right time. That is how we build lifelong relationships by proactively unlocking benefits and meeting needs before they arise. So guys, this is their playbook. Now, everybody on this call, guys, you could actually deliver value beyond this because as someone that has Mortgage Coach, not only can you be predictive with data to be at the right place at the right time. Now that's just a question of whether you have the full Trust Engine data suite or not. At Trust Engine, we are identifying who's most likely to move up, move down, first time home buyer with a high propensity score to buy. So we're doing that. But you could go beyond that and actually help the customer visualize that and see how they can build net worth over time. So as we define financial freedom lending, guys, part of financial freedom lending is the consumer experience that you deliver. And it is one, being financially literate at a pretty high level. And Todd is going to break down what does financial literacy really look like. But part of financial freedom lending is delivering an experience to a consumer that goes beyond the transaction. It's not just about products. It's about speed to need, getting to the need of the consumer before the consumer even knows they have the need, and then presenting a presentation, a digital presentation, so that they understand their need and they take action on that need, which will equal you helping realtors sell homes, and it will equal you doing more loans. So Todd, any narrative you have around the Rocket news as of late, the shift that's taking place, and how you define financial freedom lending?
I was shocked when I saw the 1 in 6 mortgages. I mean, think about that for a minute, people. I mean, that's a pretty significant number. And I said it, Dave, on a Friday call, maybe 6 months ago. I had refinanced 5 of my investment properties with a top 5 lender in 2022. And they got sold to Flagstar, who sold them to Round Point. And you know what? Those are good companies. And I feel like they were doing a good job of harassing me to refinance and get a HELOC. But, I don't think those are compelling brands that would get the clients that we had at the time that did loans with the same lender that I worked for and did my own loans with. I felt like, you know what, because my team has discipline around annual mortgage reviews, because we script in the initial phone call that we're going to be watching over your loan going forward to keep you in the best loan, and because we have a commitment to calling them at least once a year and having a conversation around their mortgage, even if their mortgage is 2.5%, that we would be still in pole position when it came time for the refinance conversation. And then all of a sudden those loans went from Round Point to Rocket. And I was like, holy smokes, because I know that I believe Rocket is a valid brand. You can think whatever you want about their ability to close loans and purchase and all that, but that is a recognized brand that's won the JD Power Awards for best things in the past. And they're legit competition. I feel like now, even the clients that my team has done a great job doing annual mortgage reviews, great scripting that were your loan officers for life. I think now Rocket will absolutely have a seat at the table going forward. And I think that we have to be aware of that. We've got to be better in our processes going forward. And so we can unpack that a little bit more. Certainly, Dave, those who have the Trust Engine app and the full suite, I think are definitely have a little bit of an advantage. But for those of you who don't fret, right? What you just need to do is just have better discipline around it. And I'm happy, Dave, later on to talk in the call about how I would start that practice if I don't have it, how we script it now in our team. But when it comes to financial freedom lending, there's three parts of the financial freedom piece, right? There's your financial freedom as the loan officer, right? I mean, certainly selfishly, you should be looking at your own plan. Secondarily, it's the financial freedom of your clients, right? Dave, you and I have showed over and over and over again that there's a huge wealth gap between renters and people who own homes. And so we know that for the average person who's going to only be putting away, I heard a statistic over the weekend that the average person saves 3.8 to 3.9% a year. And so I've got a simulator that shows there's no way they're ever going to make enough money to retire, period. They're just not. I mean, it's very unlikely unless they've got a stock in their portfolio that shoots through the roof. The average person is not going to lead a great life in retirement. They're going to continue to work later. And so ultimately, we can at least give them a head start with helping them build wealth and home equity. And so I think that's great. And then I think the third part of it that I'm really passionate about right now is also helping our real estate agents. Because ultimately, I hate to say it, they don't know financial literacy like you do, like you hopefully do. And I think we have an opportunity to help them also partner with them. You did a great call with Jeremy a few weeks back, Dave, where Jeremy talked about helping the first-time home buyer understand the ROI on their down payment versus the equity that they built, and how he was basically helping his real estate agents figure that out. And I thought that was really genius because he gave his real estate agents a tool and a different conversation to have with clients about the wealth that they built. And then he's talking to them about being a first-time seller, what that looks like, how it works, and then how they can take that investment that they've made, and then they can actually then make it more exponential in the next move by increasing their asset base. And so I love that piece with it. The other things I wrote down is, certainly it starts with you. It's your money mindset, right? So I know you and I will talk a little bit about modern mortgage IQ, and we've got a money mindset pillar there. I said it's not only understanding financial literacy, but it's also having the ability to teach it, right? You always talk through there's different levels of competency. And mid-level is the ability not only to do it yourself, but to actually, teach it to others with, level 5 being that you actually can prove that you've done it, right? That's going to be in your balance sheet, right? That's going to show on, what does your balance sheet look like, on a monthly, quarterly, annual basis. And then I said it's also having a plan to help others grow wealth through real estate, because that's the piece that we have in there. We're not financial advisors, but we should also know financial advisors. We should have a good bench of people that we can connect people with. And then the last thing I'll say, Dave, and then I'll kind of get some feedback from you, is when it comes to your own financial literacy, right? So I talked about the money mindset. I think that is so important, right? Mindset piece of how that I'm someone who's going to be wealthy. I'm going to build wealth. I'm going to make better financial decisions by having better financial habits. But I really actually enjoyed teaching the First Home IQ content that I've been teaching. Tomorrow night, I'm teaching class 5 on credit. So if you go to my link tree, toddbookspan.me, you can see on there, you can sign up, you can jump on and you can watch it yourself. You can watch it with your kids. And I've really had a fun time because, half of the people who watch it are kids every week. I get pictures from people sending me texts of their kids sitting on the couch with their dog watching me. But the other half are past clients who are adults learning because they never learned it earlier. And then the other half is split between you guys. It's split between my mortgage friends and my real estate agent friends. And I continue to get conversations from people saying, you know what, Todd, that was really helpful. I had a realtor reached out to me over the weekend and he wants me to sit down with them, go through his personal finances, go through his personal budget, and really help him change the trajectory. I mean, he's a guy in his 40s. He's been doing this for a long time. He's sold thousands of homes. And he's not financially where he wants to be. He's got some of the pieces in place. He's got some rental properties. He owns a home, but he's just not quite there from a cash flow perspective is my guess, but I'll see when I sit down with them. So that was a lot, Dave. What do you think?
Yeah. So before I give my kind of breakdown on financial freedom lending, I do want to tie a bow around where to be active. Like as we do for those of you that are going to do this challenge, whether you're doing it yourself or you're a manager, like keep an eye out on the Mortgage Coach Mastermind page, as well as the Win by Noon. By the way, not it's the Facebook group, Mortgage Coach Mastermind Facebook group. So if you're not already subscribing to this, like now is the time to join the 17,800 members that are in this group. And then like I shared my first post. This is a place for us to fire each other up and to share stories. So I would love to hear some stories about Mortgage Coach total cost analysis and personally shine a light on those. Like I would love to do more interviews, bring content in here. So if you are participating, this is the home base, and also the Win by Noon group. Todd will share a link to that. Those are two you must be in those groups. And I would love to just see a record amount of engagement and participation. Let's inspire each other and let's share great Win 30 stories and strategies. All right. So let's break it down. I want to start by breaking it down from the lens of the modern mortgage IQ assessment. And if you're on this and you have not, I think there's over 700 loan officers that have taken this assessment. We'll put a link to the modern mortgage IQ assessment. Will only take you 3 to 5 minutes. But one of the pillars of the 8 pillars of a modern mortgage advisor is money. And there's really 3 ways to look at money as a financial freedom lender, as a modern mortgage professional. There's making a lot of money in the mortgage industry. So because you've got all these best practices, you know how to market, you know how to sell, you got the right mindset, like you make a lot of money. And then making a lot of money doesn't equal saving and investing a lot of money, because the only way you achieve financial freedom is through the combination of saving and investing. Now most people in America achieve financial freedom through the investment of their principal residence. They buy a home, it provides a roof over their head, and we all know what's happened to appreciation. And that's why First Home IQ, we want to get more people in their 20s into the financial freedom lending game. Because if you buy your home in your 20s, the chances are much better, but by the time you age, you're going to have the equity, your home's going to be paid off, or you're going to have enough money in the bank to paying it off as a strategic financial planning decision. That is a key pillar. So Todd, how would you break down, like in the most simple, like if we're creating this playbook of a financial freedom lender, what are the chapters in the playbook?
I think that you're probably at the section of you and then helping others, right? So, you have part of the book that's going to be about your own journey, and how do you become financially literate? And then how do you really have a plan? That was one of the things that, early on I did. And so, one thing I should have said early on, Dave, too, is that when I'm talking about these things, I'm not trying to throw shade on other people that, you're not doing these things. What I'm trying to do is hopefully encourage and inspire you to, if you're struggling to change some habits, if you're already going down this path and you're doing a pretty good job, I'm trying to pour some fuel on the fire so you can do a better job. And if you're already crushing it, then I'm giving you a virtual high five, and I'm encouraging you then to get out there and spread, the message more. And so, I think when it comes to that, we got money mindset in there first, right? I think that's where the modern mortgage IQ pillar comes in, because if you don't understand money mindset, then you're in trouble. And I taught 2 courses on that within the First Home IQ curriculum, right? The first 2 classes I taught were on money mindset to these kids to understand and think differently about money, because I grew up thinking about it totally wrong. I had a dad who was super cheap, didn't want to spend on things, and I had a mom who spent as long as she had a check in the checkbook, she assumed she had money. And I grew up financially confused as a result, and I share both of their tendencies, more of my dad's cheapness than I do of my mom's spending. But I spend on big things, on vacations and other things, which is kind of what my dad did. And so I think the mindset piece is first. And I think the second part of it's just the overall, your own financial literacy and your own financial
Hey Todd,
plan.
can I interrupt real quick? Because
Yeah.
there is a whole chapter and lesson in Modern Mortgage IQ, which, by the way, is free to everyone. I mean, we want you to be ambassadors and help share this, but it's called Your Money Personality, and
Oh, you're
so
talking First Home IQ. You said Modern Mortgage IQ, First Home
oh,
IQ.
I'm sorry, I meant First Home IQ. around, what is your money personality? And while it's absolutely created for Gen Z, guys, everybody, most people don't really understand their money personality the way they could and should. So I would just recommend people to check out that. It's pretty quick thing to read and consume. Like you could literally understand your money personality and add to your money mindset, as Todd put it, in less than 30 minutes. So check it out.
Yeah, and I think your own financial literacy is important, and I've been broke before, right? I was broke 15 years ago in 2010. I'm embarrassed to say it, but I bought a house with 5% down that I barely qualified for. And, I literally had to close on a certain day because I was getting paid the day before, and I would have from my commission check enough money for the 5%. And then I met with the contractor and I'm like, yeah, okay, I can get you a check in 2 weeks. I'll be able to move money over to that account, which is true because money got deposited into a brokerage account. And then once I had it, I could transfer it in my checking account and pay him. But, I was just running by the skin of my teeth, and that's, transparently terrible financial planning at the time. And so what I did was I just said, gosh, I never want to be broke again. I never want to be in this position where my cash flow is so bad that I don't have reserves to do what it is that I want to do. And then transparently, I should have never bought that house at that time. Now, it worked out financially for me. I got a friend, Kevin Kaufman, who Dave and I've interviewed a bunch of times, and he's got a Next Level Agent podcast, and he was interviewing a real estate agent, and they kind of made a joke, and they said that owning real estate long term has made a lot of really dumb real estate agents look smart. And I'm like, wow, I resemble that comment, right? I mean, not only in 2010 was I broke, I was negative almost $1 million net worth. I did own 5 houses, but they were all way underwater. Thankfully, I had low rate mortgages and tenants that were paying them, which got me through it. I still own those 5 houses today. And guess what? They're no longer worth negative a bunch of money. They're worth a positive a bunch of money. And so I resembled that comment. So I also would say that when it comes to your personal wealth building, Rome wasn't built in a day. It's a long-term process. But I do think, Dave, you got to start with yourself, and then we could probably divide that into different chapters, just like we do in First Home IQ. You'd have what you just said, your money personality, money mindset. You'd have, credit cards, investing, and your true financial plan, or, real estate plan, in there as well. I did think it was interesting when you and I did our Impact 100 day, and I talked to 70 clients. I forgot the numbers, either 7 or 8 told me that they wanted to move in 2025 and keep their current house and rent it. And I'm like, oh my gosh, I love that conversation. And so again, great opportunity. Number one is I identified future loans. And number two is I identified an opportunity to be a financial freedom lender and help people grow wealth.
So guys, let's start putting some check boxes on this. So first of all, the way you make money and the way you do loans, does it help consumers build wealth with real estate faster? Because your advice matters. Like the way you are presenting mortgage strategies to consumer, you truly are helping people build wealth with real estate faster, and you're helping them achieve financial freedom faster. And be honest, and I will have to tell you, if you're not giving every family you serve a mortgage coach total cost analysis, I challenge, like if you gave yourself a high score and you're not doing that, like my guess is you could be doing that better, and you could be doing that more efficiently and more effectively. So are you a mortgage coach black belt? That should be one of the first things. Like I would make the case that you are not a financial freedom loan officer, financial freedom lender, if that is not how you serve every customer that you run a credit report for. And then, just kind of drilling down beyond that, if you're not doing annual reviews, and you saw what Rocket's doing, like we want to get to the needs and anticipate the needs of the consumer. So if you're not using data to anticipate the needs of the consumer, and you're not doing annual reviews, I would just challenge you. You're not a level 5 financial freedom lender, and you're not a level 5 financial freedom loan officer. Like how you do the job matters. And then again, are you on your way to financial freedom? Do you have a plan? Are you making more money so that you can invest in money? And I would make the case that there's a really good argument, if you're in mortgage and real estate, that owning real estate strategically is something that you should seriously consider. I mean, there's a lot of top mortgage coaches that own a lot of real estate. There's a lot of different ways of owning real estate. But there's no question that when you look at what's happening with AI and you look at how the world's changing, if you want to future-proof your financial freedom, there's probably a real estate strategy involved, whether you're investing in property, fix and flips, apartments, trust deeds. You're actually the one loaning on private money loans, but there's probably a real estate strategy. What are your thoughts on, Todd? Because you're part of a lot of groups. You consult with a lot of financial freedom loan officers. They're friends of yours. They're people that you network with. What are your thoughts on how people should go about planning and how should people, I think you call it wealth stack. Like what is the right way of thinking about wealth stack if you're a mortgage or real estate professional?
I'm going to start off with the Michael Drucker quote you've all heard before, right? What gets measured gets managed. And it comes back to our Win 30, right? We're measuring what we're doing, and that's going to create success for us. And, one of the things that I did in 2010 was I created a 10-year plan at that point. My last child, I thought would have been out of the house in 2020. So I called it my 2020 plan. And I put on there what I wanted my net worth to be at the end of 2010, at the end of 2011, and I didn't know where I was going to go with it. So one is you got to have a plan, right? I didn't know how to connect the dots, how I was going to get there. And for me, I believed real estate was going to be a big part of it. And certainly it is. About half my net worth currently is in real estate. So that definitely worked out well for me. But there's a sequence to it all, right? There's a sequence to it. And I think that for me, I got in trouble because I bought real estate too early and I didn't have the reserves to get me through it. And so that's why I was squeaking by, with my credit cards all maxed out for quite a while in 2020. Or it's actually, I'm sorry, in 2009-ish, 2008-ish, before I got to 2010, where I was still flat broke, but at least had some assets. So I think, Dave, again, my financial stack is, the bottom rung of it is modern mortgage IQ and first home IQ. I shouldn't say the bottom rung. I mean, the first step, right? Because again, you have to have that money mindset. You have to have some ideas to be able to have conversations with people about how to grow wealth. And then you also have to have your own discipline, your own hygiene around your financial plan. And you should be starting to measure your money. So I'm part of a group. It's called Be Wealthy. That's the top tier of my stack. So I'll talk about it in a second. But I literally get a text from them the first of the month. I got it this morning that says, do your balance sheet today. And so I used to do my balance sheet on an annual basis. And that's how I was tracking it when I got it. And then I started doing it on my own on a quarterly basis. And one of the requirements of being in this group is to actually look at it every single month. So what I do at the end of the month is I take a snapshot on all my statements and all that, and I compare it, right? What went up, what went down. I've definitely become a lot more conservative, Dave. I mean, I think part of the reason I never really built wealth is because I was too risky in my investments. I'm like, oh, I heard today AI is a good thing. I'm going to buy Nvidia. Oh, I heard that this is good. I should buy that. And then I was never patient enough to let the thing actually take off before I heard the next shiny object and change the investment on it. And so, again, I'm in the boring, closed end funds, paying dividends. I mean, that's where most of my stuff is. And yeah, I have crypto and I've been in it for a while, but that's really still a small portion of my overall net worth. It hovers a little over 5% now. And it's just because I bought it and it went up. But, it wasn't a strategy. I think that's really, where I've got a lot of friends who have, 90% of their net worth in crypto, and then they're scared to sell any of it. And it's going up and down, 25% swings, week, month, month by month. So number one, I think, Dave, is just you got to get great at you. And then start practicing those disciplines yourself. Because if you can't look in the mirror and be doing the things you're telling other people to do, then I think there's a gap there.
Yeah. So what I wrote down, first of all, there's a plan. There's goals. You created that plan. We've talked a lot about having a 5-year vision for yourself and then updating that 5-year vision. And that 5-year vision should include net worth and whatever your wealth goals are. So there's a plan. And then there's the consistent measurement. And Todd just outlined, he went from doing something annually to monthly, looking at his balance sheet and your P&L, like looking at your P&L and your balance sheet on a monthly basis. Because to your point, what you're not measuring, you're not managing, and what you're not measuring and managing, it's probably not optimizing and growing at the rate that it could. And then there is investing. We've talked about investing in real estate. And I just can't advocate enough that not to push anybody to invest in real estate, but to understand it, because you want to help consumers get their kids into homeownership in their 20s. You want to help your consumers have a real estate plan that's right for them. Let's face it, given the lock-in effect and all the people that have a 2, 3, 4% mortgage, you need to be able to analyze, hey, should you be an accidental landlord? And while you didn't buy that home with the goal of renting it out, you should be able to have that conversation that, hey, look at how you could buy your move up before you sell. Look at how you could rent that out, and move up. You need to be great at having those conversations. And then we just got a question in here. Todd, how big a part does investing in stocks, EF, ETFs play in, a wealth building journey, and how should people think about that?
I mean, I think you have to, when you look at the time that we are in the market here, we are in spring of 2025 and the stock market's pulled back pretty significantly. So really what you need to do is be thoughtful in your, in the diversity that you have in there and have non-correlated assets. And I'm not a financial advisor, nor do I play one on TV. And so, I personally, it's the middle of my wealth stack. I've done two different things. Number one is I took a big chunk of my money and I gave it to an advisor, so that I would not be taking too much risk myself. I thought, okay, you know what? I take more risk probably than I should. Now, the weird part about it is I've out-earned most advisors that I've ever hired. And so it's frustrating to me, don't get me wrong, but they've done it with less volatility than I have. And transparently, with the strategies I'm doing now, I'm probably going to move that money back into my other ecosystem. So I was at a financial conference the last Friday, Saturday, Sunday, with about 300 people. It's about 35 people from my wealth group that are part of the group. And that group really has become kind of my focus for this midterm, like the sequence of taking and creating cash flow, right? And trying to close the gap I mentioned before between where people are and what they actually need to retire. And they've got some unique ways that they do it. And so what I'm working with them is I'm working with them to do either just allow me to teach their stuff in a 1-hour webinar to get you thinking about kind of a different way of approaching finances, or get them to come on and teach it with me. But just DM me and or email me, todd@winbynoon.com. I'll be promoting that. I'll make sure I promote it, Dave, in the Mortgage Coach Facebook group. I'll also be promoting it in the Win by Noon group. But I would expect that in the next few weeks, I'll be teaching something on that. They do a 3-day course, but it's freaking 3 days. It's a Friday, Saturday, and Sunday, and most people just don't have time for that. So I'm trying to get you guys a little bit of a head start.
I think it would also be cool, Todd, because, we talked to Jeremy the other day and he was asking us, how he could use some of the Modern Mortgage Summit keynotes that are in the Modern Mortgage IQ platform, how he could use some of that real estate content to do, real estate leadership events. And, by the way, guys, Jeremy is going to, have these events on Zoom in person. He's going to frame one of those videos and they're going to watch it together. And then they're going to mastermind around it and come up with action plans. So stay tuned on that. He said he would create a couple guided experiences. So for all you that are in the Modern Mortgage IQ platform, stay tuned for that. But Todd, it would be cool for you to do how to help realtors, their financial freedom lending, and maybe we call it financial freedom real estate or financial freedom realtors. What are your thoughts about creating a guided experience in Modern Mortgage IQ for everyone?
I would love to do that. I mean, there's some really great content in there, and you can all get, Dave, I don't know what, you probably have the better access to the link for it, but a free 10-day trial for Modern Mortgage IQ. It's got all the modern mortgage, modern real estate summits in there, but we've got some great conversations around money in there. And so, yeah, I'll do a guided experience. I'll pick a couple of those and commit to doing at least 2, where I'll look at some of the longer term strategies that some of the real estate agents have talked about. There's a great one in there. It's truly one of the things. It's the reason I joined Be Wealthy, because it's got Brett from Be Wealthy. Brett Tanner did something on self-directed IRAs, and that's been a game changer for me. I self-directed my IRA, and I'm doing, different types of things, with the IRA. it's investing that I was going to do with my own personal money, but it's less liquid. And I couldn't afford to be less liquid in this market, right? When you've got uncertain income. And so I'll do a guided experience around a couple of those. I'll probably do one on the self-directed IRA piece just because I'm really digging that. And I'll pick one of the other ones that either Josh or Nicole or Seth O'Byrne did in the real estate side. And I'll put that in there. But, again, I think it's just a lot of it has a thirst to learn, right? You have to think about, where, can you plug into some podcasts and do some other things? And then I would just encourage you, really, number one is think about risk. You just can't get something that's too risky. You got to get something that's actually, going to be okay in these markets. I think, number two is, you've got to have reserves, right? You got to keep some money out in cash and boring stuff. You can still get like 4.5% in a savings account. So, that's a pretty good return. And I would encourage you to have, commission people should have 6 months at least in reserves of expenses, right? Certainly I didn't use the B word budget, but if you don't have a budget, be looking at it. You probably have some things you can cut out of your budget to put back into your savings, right? So I had this aha this weekend where I've got a couple things I'm paying $150 a month for, and I'm like, I'm not using them. I haven't used them in like years, one of them. And I'm like, gosh, that's $150 a month I can actually put in to fuel my cash flow and fuel my future growth. And so I would be thinking about that. And then I would just be, really then once I've got that all dialed in, then you can look at these other less liquid long-term strategies. But, the bottom line is first thing I got to Vegas for this conference, I got a text from my property manager on one of my properties that I need $7,800 to pay for an air conditioner that went out. I'm like, oh, that really sucks. But, I've got a plan. I've got reserves to cover it. I've got that built into the financial ecosystem that I've built. And so I just think you have to really look at it from a safety and liquidity perspective first. And then after that, you can look at, the other things. And then the last thing I would probably throw in there is life insurance. I mean, you all should have life insurance if you have a family. I know too many stories of people who've just, had unexpectedly had someone pass away and just they haven't been set on that one. And so, certainly you always start off with term insurance. I'm a big believer in whole life. I'll find it. There's an interview that Deborah and I did with a guy named Kyle Fuller from Factum Financial on, they use it for infinite banking, but that's one of the people I rely on for there. And that's one of my places I've got liquidity is in my properly built cash value life insurance. Super boring. Some people think it's a bad investment, but again, it's just part of my safety and my liquidity.
Love it. So, guys, we are almost in the fourth quarter. If you have questions for myself or Todd, put those in chat. If there's just an idea or something that a topic around financial freedom lending that you guys want us to cover, let's do it. Todd, what I'd love to throw at you as we go into this closing quarter, that if there were some very specific things that loan officers do right now, like literally today, that would fit under the category of financial freedom lending, but it would help them either recruit and win a realtor, or it would help them close an extra loan. Because let's face it, it's still tough out there. This market is not an easy market to win in. People are winning, but what are one or two like loan now, realtor now actions, strategies that people should be thinking about and implementing?
Well, first off, do what you and I did, Dave, to prepare for this call. Write on a piece of paper, financial freedom lending, right? And then write underneath it, I'm a financial freedom loan officer or lender. And then write what you think that looks like for you. Just a few sentences on what you want to become or what you already are, hopefully, as part of this community. And then I think that the loan now strategy is picking up the phone and calling your database. It's super boring. It's all I ever talk about. But it's a number of conversations you have. We've got a Win 30 challenge to talk to 10 people a day and build 2 TCAs. I believe if you went to your database of loans you've closed in the last 2.5 years that are rates that have a 6 or above in there, they're still wondering if you haven't talked to them in the time since you did your loan, or maybe you talked to them at the end of last year. They're wondering what's going on in the market this year. They're wondering about all this stuff that's going on. And you don't have to have a crystal ball just to reach out and help them and let them know that you're here, to quote Renee Rodriguez, to be their lighthouse, right? To get them through this. So I would commit, you got to prepare for this, right? So when I did the Impact 100, I've got a team. So I had somebody actually pull all the people I was going to call. But you've got to spend a few minutes, right? This is the work before the work. and you have to get your list together, pull out all those past clients. I would just dump them in Excel. You can use your CRM. I dumped them in Excel. Why? Because everyone said, well, Todd, you got a bitch in CRM. I don't. And so that's why you can make your calls. Mine are in a Google Doc. And I just update it and I just start calling people. I start with the first one. I don't cherry pick. And then every once in a while, like I get like 5 in a row where no one answers, or I talk to someone who doesn't really want to talk to me. And then I'll cherry pick to have a happy conversation with someone I know that's gonna want to talk to me. But I think the number one thing for loan now strategies, you've committed to 10 quality conversations and 2 TCAs. You can build these people the future TCAs. I love Jeremy's. I know you guys put some link to his conversations in there, but he's showing people, hey, here's what it would look like if you were a first-time seller and then moved up right now. Here's what it would look like doing this now versus waiting, which is a huge opportunity. People think they should wait for lower rates, and he showed them why they shouldn't, that there's really no difference. And he's doing some big dollar loans, bigger than probably you and I are doing. And there's a $25 difference of them doing it now versus waiting. And then they had more capital as a result. So I would first off, I would be doing that. So that's your client plan. It's so easy. We all know it. And then if you haven't told them up front that you are a lender that's there for life, then this is a perfect time to give them the script. Hey, Dave, I'm super sorry. I haven't talked to you in a bit. One of the things that I've decided in 2025 is to be a better loan officer to my clients like you, and make sure that I start doing annual mortgage reviews going forward. I know you have a 2.5% rate and you're probably never thinking about moving, but did you have any questions about what's going on in housing or the economy? And then you shut up and you let them ask questions. And I know you all have a little basic knowledge. You don't need to be super detailed. You don't need to be Dan Rawich and be able to, tell people what the unemployment number is and what the Atlanta Fed said and all the things that we hear about. And then you're just going to ask more questions, right? I mean, it's all about curiosity. And by me asking the question after the question, that's how I uncovered who was going to move this year. That's how I uncovered who had a kid that was going to buy a house. That's how I uncovered who was going to keep their current house and use it as an investment property. My average call was 8 minutes. So again, it wasn't tremendously long. Some was 2 minutes because guess what? Those people didn't really want to hear from me. They picked up the phone. That was great. But they weren't as excited to hear from me. I gave them what they wanted and then I moved on. And so I think that that's really number one, and build TCAs for all those folks. And then make sure, number one thing when you get off that call is if someone's got a rate with a 6 in front of it or higher, is what is your target rate, right? And I don't give people target rates. I give them target payment savings, because I don't want them to be listening for the rate when someone else is quoting with 3 points. I want them to know that as soon as they can save $150 a month, that I'm going to have a member of my team reach out to them and start a refinance. And I've got that commitment from them. So that's what my list has. It has last call, conversation I talked about, and what is our target rate. And then Dave, I think on the real estate agent side, it's
Hey,
calling your realtor.
time out. Before you
Yep.
go there, I want to just wrap a bow around the database and then we'll go to real estate because we got plenty of time. So first of all, your database. And if you have the full Mortgage Coach Next Generation, the Trust Engine suite, like make sure you're logging into that app every day and you're making sure you call your data signals by 9 o'clock. And if you're getting data from someone other than Trust Engine, that's great. But get those signals. Like the future belongs to the data-driven mortgage coach, someone that is monitoring their database. And by the way, and they're taking action on it. Like we're really committed to helping make it easier to take action, to the point where we're literally using data to automate the creation of the mortgage coach total cost analysis. But make sure you're doing that. And then to Todd's point, make sure you're reaching into your database. And I would just say the number one loan now strategy is looking for first time sellers, people that have bought that first home within 3 to 7 years. They all have a lot of equity. They all have a great ROI. And by the way, obviously, if you've got a great CRM and you're using our platform, it's easier because you can gut it out. You can kind of net out between you and the real estate agent, like who bought a home within 3 to 7 years that we think most likely need or would be interested in moving up. And then I'm going to put a link to this. We're updating what we call the 10X page. And within days, you'll be able to go and go to trustengine.com/10X. This page is being updated. If you're not a mortgage coach, at the very top, you can sign up and become one. And then we're just giving you 90 the best 90 minutes of all the interviews I've done in the past couple of months. Guys, if you did not watch this interview with Jeremy last month, watch it. And then we have a 1 minute clip and a 2 minute clip that will help you take action on everything Todd just showed you. And then as you scroll down, if you're a manager on this, we've got an interview where I interviewed a VP of sales on how he's turning his loan officers into mortgage coaches. And then we have links to all the live training that we do every single day of the week. And at the very bottom, we've got our on-demand training. So guys, there's just no excuse not to be able to take action on this first-time seller strategy out of your database. So let's go ahead now, Todd, and transition into realtors.
So I think there's two levels of the realtor conversation. The first is to tell them what you're doing and ask them to do it too, right? I mean, that's ultimately what it comes down to. One of the realtors that I was talking to this weekend, he and I did a four-mile walk and talk along the strip in Vegas, which is always dangerous in the morning with, you have people out exercising and people that are still out from the night before. And he talked about that he had to call 600 of his past clients by this Thursday for his coach. And he's like, well, I may or may not do it. I'm like, well, either you're going to commit to it or you're not, right? I mean, it's an opportunity to call people. And I think, again, I would set a minimum standard of 10 with a target of 20, and I would be knocking those out in the morning before I got distracted by the other things. Dave already said it. It's the data-driven loan officer that's going to win who takes action.
It wins by noon. By the way, those calls need to be done by noon. Like whatever the conversation count is that you're going for, get it done by noon so that whatever happens after noon is just gravy. Just gravy on top of whatever you accomplished.
Yeah, view your hours before noon. Like if you worked at Starbucks and you were the first shift and you had to be there at 6, you get in there at 5:30 and you're counting the cash. If they still use cash, you're taking the chairs off the table. You're making sure all the cup holders are full of coffee cups and there's enough sugar out in the way for people. Like that's your morning to set up and do your most important priorities. You're calling all your data triggers that Dave mentioned. You're really just doing your calls and getting it done. So then you can just react the rest of the afternoon, right? Because the bottom line is most days there's not someone sitting in the driveway with a U-Haul waiting for a loan to fund. But you're treating the need to get their pay stub on the deal that's closing in 3 weeks like that's more important than you actually doing your proactive calls, and it's not. And so I think it's calling your realtors and telling them what you're doing with your clients and encouraging them to do it too. Because guess what? You're going to tell them, hey, I'm going to probably find someone who's one of your clients and I'll be able to make sure that you're aware of that. Or maybe I've got someone who's been orphaned by the real estate agent and my goal would be to hopefully get you, a referral here in the next 90 days, right? And so you've got an opportunity to encourage them to do it. And then in theory, they're going to refer that business to you and you're going to help them with scripts, watch that ROI video that he mentioned with Jeremy. And so it's not rocket science for them. They're not doing it either, right? How cool would it be if you had a realtor or 2 or 5 that are doing the Win 30 challenge alongside of you? And I think that's really where, that's where it gets exciting, is build your own community like we're building a community here. But in the end, then you're going to have those conversations. And I would know what Jeremy's first time home seller conversation looks like so that you can explain that to the client and you can explain that to the agent. And, what if you just cherry picked and said, I'm going to call 30 people who were first time home buyers over the last 2 years that I helped. And then let your agents know you're doing it because you need to help them grow their business too. Because guess what? They're just as stuck as you are in most places, whether they've got a lot of inventory that's sitting or whether there was one guy I talked to who's like, there's only 40 houses in my community. We have no inventory. It's really hard to sell anything. Opposite problem. Something goes on the market and there's a gajillion bids because it's properly priced. So I think that's level 1, Dave, is just doing the same thing that you're doing for yourself, but with your real estate agents.
Guys, I love this. Super fired up for this quarter. This is the kickoff of Q2. Would love to know how many people in this group are going to join us on the Win 30 challenge. So either let us know in chat or give me a thumbs up with a reaction. Hopefully we will have hundreds, if not thousands, of mortgage professionals countrywide joining us in this 30 challenge. So yeah, it looks like we've got a good group. So Todd, I want to wrap up today's call on time. Remember, folks, if you have a question, let us know. Looks like Carrie Parkinson done, already halfway through. And remember, guys, this is like the Win 30 is just a cycle. Like I would love to see this become a regular thing. And you're building habits. Like I said, 2 TCAs a day, walking 30 minutes a day, having 10 conversations a day is just a great skill, a great sales habit to being a modern mortgage advisor. But Todd, why don't you wrap this up, put today's call in action, win by noon style?
Perfect. So let me just give realtor strategy number two. Dave already mentioned it's what Jeremy's doing. It's actually teaching your real estate agents what we learned at the Modern Real Estate Summit. And so Lori Richardson, who's a great friend of the community and a good friend of mine, she does a 2 hour meeting every month with real estate agents. They typically do it in person. Last month they did it on Zoom, and you know what she showed them? She showed them Jeremy's conversation that Dave's gotten a 10x around ROI, and she taught them how to create ROI, and she taught them Jeremy's scripts for first-time home buyers. So again, she's using the free stuff in our community. Then she used Modern Mortgage Summit, me and Deborah talking about exactly what to say, and taught them how to have better conversations with what Deborah and I talked about there. And then she shifted and used two of the videos, one from Lacey Newman and one from Shannon Gillette, on that were Modern Real Estate Summit videos, and then they had a conversation around them. Now that's a lot. She has a 2 hour meeting. Jeremy's goal is to do this in 30 minutes. He wants to play a 15-minute video from the summit, spend 15 minutes talking with it, and send them on their way. And so that's an easy thing for you to do, but you just have to choose to do it. You can do it on Zoom, you can do it in person, but you could plan that 2 weeks from now and have 5 agents, 10 agents, 25 agents, and start making that a consistent thing. And so for me to wrap it up, win by noon style, let's just go where we started. We started with the win 30, and it's a super easy way, right? It's not 75 hard, and we're not telling you to stop drinking. We're not telling you to work out twice a day. We are giving you the things that you need to be successful as a loan officer to be a financial freedom lender in this market, right? Talk to 10 people with quality conversations a day and do do 2 TCAs a day, which if you're doing those 10 conversations, it's going to be really easy to be like Jeremy and be doing 5 a day. Second is look after yourself, right? You have to have mental mindset. Your mindset has to be good. And I can just tell you, me getting out and walking in the morning is really great. And so again, I haven't walked yet today, so I'm already thinking I'm gonna throw my rucksack over this shirt and I'm gonna walk later. I got to go to the dentist, right? I normally try not to schedule the dentist during my working hours, but I'm going to do that. So I'm already thinking in my head, okay, that means I'm doing an after dinner walk tonight, right? Most likely. And so be thinking through that you have to commit to these things and make it a standard. And then I think just look through what is your wealth stack, right? For me, it's Modern Mortgage IQ and First Home IQ. First Home IQ is free. You can get a 10-day free trial. Dave's got the link in there for Modern Mortgage IQ. But that's really the content for you to be financially fit yourself first, right? And knowing those things and then just start doing those. Again, I would encourage you to say, hey, here's where I want to be financially at the end of 2025. If you haven't done it ever, just take quick inventory. What is that? What is that going to look like? And then do what I did. I did a 10-year. This is what I want my net worth to be like in 10 years. Now, for me, I didn't have a to-do list. I just fell into it accidentally by buying real estate, and I got my net worth to my goal. And in the meantime, I also saved well as I made money during COVID. And so therefore I've really blown that up and blown through that number. But one of the things I would say is when I joined To Be Wealthy, you had to show up at the first meeting with a 30-year wealth plan to be worth $50 million. And the weird part about it is if you actually create a plan for it, it's actually not that hard with real estate. Just shocker, right? Using 4% appreciation. And so I'd be looking at that piece. And then the second thing is I'd just be looking at how do I become next level ninja? How do I really secure my finances? Do I have a budget, right? The B word. Do I have reserves? And then do I have a conservative investing plan? Put no more than 5% at risk. And then just be on the lookout. I'll share when I'm going to do a webinar where I talk about in depth more about kind of what I'm doing wealth wise to take what I have, which is less liquid assets and real estate, and convert it to cash flow going forward and help people get on a retirement plan. And then just execute, right? Dave said those who are actually working on this themselves, we're getting your realtors involved with it. And then you just have to take action, right? I love that you're here watching this live. I'd love if you're here watching the video, but in the end, if you just watch this and you don't take action, then it's not a great use of your time. It's entertainment. And so feel free, DM me. I'm happy to help in any way. Just know that Dave, I love getting on here and be able to talk about the things that I'm super passionate about. And really what I don't want to do is have what I've had happen over the past year. I don't want you to be selling, I never bought a Rolex, but I got LO friends who sold their Rolexes to pay their mortgage. I've had other LO friends who I know made a lot of money during COVID tell me, hey, I got 90 days worth of cash left. I don't want you to be in that position. If you're in that position, guess what? You can start making these changes now. Join us in the Win 30. And I'm confident that within 30, 60, 90 days of making consistent conversations and TCAs, that you'll be on the path financially that you want to be on.
All right, guys. So financial freedom lending, I hope you got ideas. I would love to see you execute. Please make sure you stay engaged with the community. You can do that at Mortgage Coach Facebook group, the Mortgage Coach Mastermind Facebook group. Follow me on social media. I will be posting regularly about this challenge and sharing stories that I hear from the trenches. If you're not already following savageinsights.com, make sure you follow Savage Insights. Make sure you are part of the mobile club. A couple times a week, I am sending a text to anyone who subscribes that wants to go from loan officer to data-driven modern mortgage coach. Like, if you're a leader and you want to turn your loan officers into data-driven modern mortgage coaches, make sure you're part of Savage Insights. And thanks, everybody. We appreciate you showing up, and everybody have an awesome day. This is a wrap. Take care.
Thanks, Dave.
Thank you,
Thanks, everyone.
Todd.